If you've been watching business news, and particularly this channel, you would have seen yesterday that the Reserve Bank of India announced that the policy rates were being shifted higher. This is the first time since the pandemic that they have raised the rates. In fact, since quite a while that they've raised the rates. They raised the rates by 40 basis points. And what that means is that over the course of the next few months, you'll see that your loans are going to get costlier. What's more, there are indications that the central bank and the Monetary Policy Committee, in its fight against inflation, could raise rates several times over the course of this year. There are some that are pegging the repo rate, which currently stands at 4.4%, at as high as 5.5%. And so that's quite a bit of an increase in the cost of your loans. So let's talk about the implications. Let's delve into the numbers. Let's take a few examples so that you understand exactly how this works. Adhil Shetty, who is the Chief Executive Officer and co-founder of bankbazaar.com, is joining in. Thank you so much, Adhil, and good evening to you.
Good evening, Alex.
Let's talk about the move. This is something that came out of the blue. So let's talk about the implications first. Of course, it's good from the perspective of the depositor, and I think the intention of the RBI is to have people get a real interest rate once again, a positive real interest rate, but not so good from the perspective of the borrower, right? How do you understand how quickly this gets passed on to the borrower?
A great question, Alex. If you are a home loan borrower on a repo rate, you typically will see this 0.4% passed on to you within a quarter. So every home loan on a repo rate resets every quarter. So it could happen in a month, it could happen in 3 months, but it will hit you as soon as a quarter.
As soon as a quarter. But the MCLR loans, and this is quite a lot of people who have the old loans, this is per year, is it not?
Yes. Now, when you ask about MCLR connected loans, now you're right that according to the RBI reports which came out in December of last year, 60% of people are still on the MCLR rate. Now, an MCLR related loan typically has a reset date which is once a year. So your reset date will happen after the MCLR changes. So yesterday, for example, a large private bank increased its MCLR by 0.4%, but it won't hit you immediately. It'll hit you when your MCLR reset date comes, which is typically once a year. Now, if you're lucky, that's still 12 months away. But if you're unlucky or on average, right, it should happen within the next 6 months.
With that in mind, and I think we discussed this the last time we spoke, right? Because we were anticipating that there would be an increase in the policy rate, and we will get into the mathematics of it and with a few examples. But right off the bat, if I were to look at the benchmark linked loans, which reset every 3 months, and the MCLR based loans, which reset every year, which would be more advantageous to have right now? And bear in mind, of course, that there is an anticipation that the policy rates could jump up, as I said, to as high as 5.5% by March of 2023.
Right. See, let's take a step back just to understand why the RBI brought in repo-linked loans over the last 2 years, right? And let's be clear, you can only get a repo-linked loan if you're taking a home loan today. You really don't have a choice. The change happened in October 2019. Now, you're right that there is one advantage which you just listed out, that the repo-linked loan gets reset every quarter. MCLR happens once a year. So your increase could be pushed out by as much as 12 months. But keep in mind, right, that repo rate linked loans have much better transmission. So when rates came down, they came down much faster. Also, right, I have a repo linked loan today. Even with the 0.4% increase, I'm paying 7.1% with the increase built in. Now, there are non-repo linked loans which are still priced higher than that. So I'd say that for anyone who's a borrower today, we typically recommend that you consider the repo linked loan because it is the newest avatar. And the RBI has done it to increase transparency and to increase, transmission of both the ups and downs as repo changes.
Now, before we get into the nitty-gritties of it, one last thing that I would like to ask, especially when it comes to home loans. The worry here, and we've had home loans at historically low rates. The worry here is from the perspective of the borrowers that things will change very dynamically, very dramatically. But would you say that over a 15 to 20 year period, one should not worry about this because you see multiple cycles within that time?
I would agree here, Alex. And I know you're going to analyze the data for us, and that if you're an existing borrower, you're going to be coughing up, 1,200 rupee additional EMI on a 50 lakh loan. And I'd say that these things are out of our control. So whether the repo rate goes up or down, we really can't control. I think there are cycles wherein in the last couple of years, the repo rate went down. Now it started to go up, but in the larger scheme of 10, 15 years, right, whether it's investing or buying a home, I think we should just stay calm and not take any action driven by panic.
Now, I had asked the Bank Bazaar team to help me out with a few examples, and you alluded to this right now. I'm hoping that you have the data in front of you because I'd like you to explain this to us. You've mentioned outstanding principal of 50 lakh rupees, a tenor of 20 years, which is normal for a home loan, and the interest of 7% moving up to 7.4%. What are the implications? And there are two ways in which this can pan out, right? Adhil, you could either have your EMI going up or you could have your tenor going up. So could you explain how this would pan out?
Yeah, absolutely, Alex. So let's start by saying that everything put out there is a very indicative, good example saying 50 lakh, 20%, 20 year, 7% loan, right? Now, there are three implications here. Let's go one by one. So the first thing that would happen when the repo rate went up by 40 basis point is that the bank would typically extend the tenor of your loan, but keep the EMI constant so that you don't face any immediate EMI hardship. Now, the increase in tenor would be 18 months in this case of 0.4% increase. So you end up paying 18 extra EMIs at the end of your home loan. So this is impact number one. Now, if you are someone who's savvy with your financial planning, you'll say, no, I don't want to keep my EMI constant and increase the tenor. I am willing to pay an extra EMI for this 0.4%, but keep my tenor to be the same, right? Now, that is impact number two. You are going to pay 1,200 rupees extra in your EMI going up from 38,750 to 39,900. You're going to pay an additional 1,200 in monthly EMI. This is option number two, but keep in mind, this is actually a smart option because when you increase your EMI, when you look at the lifetime of the loan, your interest outflow is half of what the excess interest outflow would be if you increase your tenor. So if you can, we always advise people at Bank Bazaar saying take the higher EMI because your interest outflow over the tenor of the loan will be lower. So that's impact number two. Lastly, right, this is not the end of it. We expect to see further increases. I don't have a crystal ball, but let's say the general perception in the market is the repo rate could go up by another 1% in the next 12 months. That increase will have the same impact, either where you can choose to increase the tenor or to increase the EMI. Now, I'll tell you a midway solution, all right? And this is a smart way of thinking about it. So let's say that today I can't afford to pay a higher EMI. So today I say, fine, let my tenor increase. But one recommendation we have is whenever you have money, if you get a bonus, if you get a pay hike, at that point in time, make a small prepayment. And I'll give you an example we again recommend to our customers, right? So we say that if you prepay 5% of your outstanding principal on a home loan every year, a 20-year loan can become a 12-year loan. And this is highly recommended to our customers at Bank Bazaar, saying try and prepay 5% of your principal every year. Even if you can't, right? Try and prepay as much as you can because the repo rate will keep increasing your EMI tenor and a prepayment will keep reducing your EMI tenor. And these two can balance each other out.
This is fascinating, and I would actually think that with that much higher increase, which you were pointing out, and you've elucidated this as well in the example that you gave us. You've said that if it gets hiked by a percentage point from this point, and that 7% then becomes 8.4%, you've indicated that the EMI, if you keep the tenor constant, goes up to as high as 43,000 from 38,700, and if you choose to keep your EMI constant, there is a huge increase in the tenor, which incidentally may not always be possible, right? Because that's the other thing that I want to ask you, Adhil. Suppose you're 45 years old right now, or suppose you're 40 years old, and you have a tenor of loan that culminates when you are 60. The bank may not want to extend the tenor too far after that, right? Because you're assumed to be working till a certain point, right?
Yeah, yeah. Your understanding is correct, Alex. So the bank assumes that you'll work until a certain age. So they'll increase your tenor until you hit that age, right? So let's say that currently I'm supposed to prepay my home loan when I'm 55 years old. Now they'll be willing to increase it such that, maybe they'll do it for another 5 years or 60 months, but they probably on a case-by-case basis will look at it for anything longer. So I think a good solution is when you do prepay, realize that while, you gave an example that, okay, today I'm at a 7.4%, but what if the repo rate goes up by another 1% and it goes to 8.4%, and I choose to continue to pay the same EMI, that's another 94 months of extra EMI I'm paying. So the solution, right, is try and prepay as much as you can, because every time you prepay, right, the tenor starts to come down.
And in fact, it's a massive increase in the interest outgo as well, because I think the easiest way to understand this is when compound interest comes into play. The longer the duration of the compound interest that it keeps compounding, the more the interest is. So in the example that you've provided us with, the increase in the interest over that 94 months, which is nearly 8 years, is as high as 36.5 lakh. And if you increase the EMI, the difference is only about 10 lakh. So I do want to understand additionally from you, is there something that you need to bear in mind if you're talking about what stage of your repayment you are at? Does that have a bearing at all in the decision that you make?
Yeah. So 2 points, Alex. I think the point you highlighted to your viewers is fascinating, right? So we saw a simulation wherein you can either go with a higher EMI and you ended up paying 36 lakhs more over the lifetime, or right, for the same 1% rate in increase in repo, you took the higher EMI with the same tenor, but you only paid 10 lakhs more. It's fascinating what compounding does, wherein a 10 lakh higher outflow with increased EMI ended up being a 36 lakh outflow with a higher tenor. Now, one thing to keep in mind, right, is we built this entire example using very common numbers, right? 20-year loan, 50 lakh, but everything changes according to your particular situation. So that's why you should go check online on a tool. There are a lot of interesting EMI calculators out there, which you can check out. Now, the longer the tenor left in your loan, the more the impact of the repo rate increase. So let me repeat that. If you have 20 years left, the increase in the repo rate is going to affect you significantly more than if you have 5 years left in your loan, because that's how the compounding works. So I'll give you another example, which is based on the same principle. We say that you should consider refinancing to a better deal. The longer the tenor left in your loan, and the longer the loan principal, and the larger the loan principal that's outstanding. So that's one of the impacts of compounding. The longer you have left, the longer your loan principal outstanding, the more you should be aware of these details, because the impact on you is larger.
You've summed it up beautifully, and you've very clearly explained the advantage of increasing your EMI. Of course, and a lot of the financial planners, Adhil, that we speak to say that it's important for you to consider the implications of that as well. Because if you're increasing your EMI to the point of not affording to save for your retirement, that can be detrimental as well. It's important, I think, to point that out. Adhil, thank you so much for joining in. Pleasure speaking with you.
Thanks, Alex. Bye.